All right. So actually, before we get started with this topic about the insurance for the crypto industry, we just wanted to do a very small survey. If you can actually take up your phone, scan the QR code, and let us know, right? Have you looked into buying insurance if you are in the crypto industry? Yes, no, but you are not quite sure what insurance product is available, but you would like to happy to explore. For anybody, actually stop by our booth and pick up a gift. So let me just talk a little bit about OneInfinity. So OneInfinity is the product line launched by OneDegree. And OneDegree is a licensing insurance company in Hong Kong. We started operating the business about 2 years ago, and today we are the only insurance company in Asia Pacific very much specifically focused on the crypto industry. And we provide insurance coverage and policy throughout the value chain of crypto. So therefore, we are the only one actually partnered with Munich Re, which is the largest reinsurance company in the world. And also in the past 6 months after we launched this product, we have now working with some of the very important infrastructure providers in the industry, such as China, Amber. We also work with various of wallet solution providers. So therefore, exactly what is insurance for the crypto industry, and why do people buy insurance, or why do they not buy insurance? This is a very good question, especially very relevant this week, given what happened with FTX. When FTX first happened, I just landed in London, and I was thinking, I need a joke to actually start my presentation. And then I went to the speaker's dinner. Someone came to me and said, can you tell me, did the FTX actually buy insurance? And I thought, that's not a joke, but it's a very good question. I hope they did, because now they really need some DNO, the directors and officers protection. If they haven't, that's a lesson learned, actually. So therefore, when we talk about the risk by the insurance professionals, we talk really about 3 levels of insurance or risk. We talk about the inherent risk, which is if you actually operate in your space, you provide services to your customers, you actually running your daily operations, you are facing certain risks, and that is the risk you have to manage. That's what we call the inherent risk. So how do you do the inherent risk? You can control your risk, you can migrate the risk, or you can decide that you want to avoid the risk. But there are certain risks, no matter how good you do, you cannot avoid it 100%. And that is the risk, what we call the residual risk. And that is the risk that you want to transfer to another capital provider, which is the insurance company. So what we always say or refer to as residual risk is called the risk mitigation and the risk transfer. And that's the solution that OneInfinity provides to the crypto industry. Now, who are buying insurance and why they're buying insurance? What we have seen in our past year of operation, we have dealt with hundreds of inquiries from all over the world. People are buying insurance because this is increasingly becoming part of their corporate governance. People wanted to demonstrate to the regulators and also to the investors and to their board, but more importantly to their customers, that there is sufficient control of risk, and that the control of risk is endorsed by an insurance company who is underwriting the risk and who is putting the risk on their own balance sheet. There's nothing more powerful than that sort of endorsement. You can actually go to an auditor and they will give you a report, but that report is for that specific point. But insurance companies, they are willing to share that risk. They are putting their own capital against that risk. So there's nothing more significant than that sort of endorsement you can demonstrate. But also, it is actually incentives to the board and senior management, because with that protection, they know that they are protected should there go anything actually goes wrong. And they can actually use the resources, the payment from the insurance companies to protect the company, but also to protect themselves personally. So finally, this is a very important risk transfer. It protects the company as the bottom line. So you may have a top line that you want to achieve, but if something goes wrong, all you care about is actually you still have the bottom line that is protected. But we have also very interestingly seen that insurance has increasingly becoming a marketing tool or actually the brand building. It demonstrates to the assurance and the sustainability. Today, if you go to any of the large exchanges, be it Binance, be it Crypto.com, you will see on their About Us a big press release about the insurance limits that they purchase. Why do they do that? Because in an environment lack of the very clear regulatory control, when customers, they think about their own assets and the security of the assets, what they want to see is actually you are protected. If there's a hacking, if there's internal fraud, if there's anything goes wrong with your system, if you fail to actually deliver the service you promise, there's the insurance that can actually protect your customers and their interests. So it's very important that people wanted to demonstrate they care and they protect their customers. And that's why insurance has been actually used as a brand building. But then finally, it is actually a value proposition. We have increasingly seen after a lot of the companies, they have bought their own insurance, but the limit compared to the total value of assets under management is very tiny. What do? The customer will say, well, if something happens, right, this is more of a zero war catastrophe sort of scenario. And for the limits that you provide, it's nothing. I may or may not get anything. Then a lot of these exchanges, custodians, they will come to us and they say, can you actually protect our customers? Can you provide insurance policies as a top-up for them? Yes, of course we can. So therefore, insurance has now been viewed as a value-added option for the customers. And also the third-party due diligence, as we said, oftentimes you go out, you have the auditor's report, you also have the SOC 2 report. But more importantly is you can say, we have insurance. Somebody is willing to actually put their own money down, their own capital down against our credibility. So that is a very powerful value proposition for their customers. So in essence, insurance is actually used for risk transfer, trust, and sustainability. And we do want to actually get that message across. However, it is not that easy to buy insurance. If you have ever actually tried to talk to an insurance company or a broker, you say, hey, I'm in the crypto industry, I'm in the Web3 industry, I'm in the technology industry. Any of these keywords, it is a red flag right there with your insurance company or broker. And especially if you mention the word crypto, very likely you will say, no, we don't do that. You need to actually find another solution. So that's why we are the only company that our entire team, we do not do any other commercial insurance. The only product that we offer is for the insurance, is for the crypto industry. So why is it? Why is it that the insurance company, you wonder, it is a huge industry. Actually, if you look at the entire city of London, it is filled with insurance, reinsurance, and the insurance broker companies. Why can't they actually place your risk? The reason is because it's lack of historical data to start with. We all know insurance is about law of large numbers. When people have data, let's say if you want to buy a car insurance, you want to buy health insurance, you have hundreds of millions of data that you can mine. You know the frequency, you know the severity, you know the upside, you know the downside, then you can transfer the risk. So it's very easy for an underwriter to mine the data. But when it comes to the crypto industry, the first policy was issued probably about 5 years ago, and today there's no loss in the industry. There's a lot of incidents that happened, a lot of damages, a lot of loss happened, but there's no insurance claims that happen specifically. So for an underwriter to work with this, the underwriter scratching his head and thinking, how can I price this risk, right? And also, this is a risk that is built on the new technology. We always say crypto, and people actually read negative news every day. My husband actually told me, when I first told him, I said, I'm going to do crypto insurance. My husband said, I'm not sure it's a good idea. And he's reading Financial Times. And he said that there's not one day that passed without the negative coverage on the Financial Times about the crypto industry. You're not going to make money. So that's just that people do not understand what is the technology. And with that technology implemented in the business process, what is the vulnerability and what is the risk? So therefore, they are unable to price that risk either. They are unable to manage that risk as well. So finally is the digital space is very different in terms of the value chain. We started with a chain. Then we started with layer 1, layer 2. Now we're talking about cross-chain. We're talking about whole different business process. The essence of our technology is we're going to either incrementally change the business process, or we're going to challenge the current process and say, hey, there's a better way, and we're going to make you obsolete. So the underwriters, they do not understand. They have never seen this. Will it work? Will it not work? Right? And so they are not able to actually to judge in this entire value chain exactly what you do. So for example, we have been talking to some reinsurers about slashing insurance. We need to start from what is a validator, what is slashing, and when the slashing happens, what is the root cause of slashing? And you have to actually start from Crypto 101 to educate the entire insurance industry. In order to get the point, people say, I have no idea what you just talked for about 40 minutes, so maybe we can have a second meeting, right? So therefore, you need somebody who is crypto native, who understands what you are looking for, who understands what your pain point is, and in order to provide you with a solution. And that's exactly what we do. So we actually provide, to simply put it, two products. The first and the easily understand product is actually we do the wallet coverage. Be it the cold wallet, you use HSM, you use MPC wallet, or you use any of the other technology to build your own wallet. That is the wallet that we cover. So we cover cold wallet, warm wallet, and hot wallet. So for the cold wallet, the most important thing that we cover is internal fraud. Something that happens with your organization and cause the loss of the assets that you held in the cold wallet for your clients, and that's what we cover. But that's not the only source of the risk or the only point of failure. There's hacking to your warm wallet, hacking to your hot wallet, and that's the solution we provide there is a crime insurance. So it includes both internal crime and external crime. Now, just from the definition of these insurance coverages, you can see that species insurance is much cheaper because the coverage is actually much, much narrower. But the crime is much broader, so therefore it's more expensive. When an insurance company actually looks at it like this, they need to actually understand what is cold wallet, what is a hot wallet. From our perspective, we actually think the temperature of the wallet is important, but it's not very relevant to our pricing. What we really look at is actually the internal control and the risk management associated with the entire deposit and withdrawal process. So that's why it's very important the underwriter needs to understand the ecosystem and how the technology works in order to price the risk. So the second part of the product we offer is called corporate liability cover. And this is the cover I said FTX. I hope they bought the cover. And if they have, now finally the insurance industry has one claim point, right? Now, what this covers is it protects against it protects all your directors and all the senior officers actually running your business. Should there be any litigation, regulatory inquiry, investigation against your directors and officers, the legal costs or the damages arising from such things is covered. So that is the directors. In the traditional finance world, a lot of people actually now these days coming into our space from a very traditional financial institution. And this is a must-have for anyone to operate in today's world. The other one is actually the professional indemnity. That actually has a broader sort of application. It involves the service providers. So long as you are a service provider and you make a promise to your clients and you actually make a profit from delivering that promise, then there is a probability that you may actually fail in delivering your promise. When that happens, if you do not actually address that and remedy that, then will it cause a damage to your reputation. So this is when the insurance will come in and say, don't panic. For any damage to your clients and a loss to your clients, the insurance actually will cover it. If the client actually sues you and the client says, look, I'm not very happy about the situation, then all the legal costs is also actually covered. This is very important to cover, actually, especially for the crypto industry, given the nature and the fast moving, but we are still a new technology. It's particularly very important to get this covered. So therefore, I've said a lot of the reasons. Now you understand when you knock on the door of an insurance company or a broker, why you are not actually getting the cover. So why we can actually do the cover. It's very important is to say that this is a multi-disciplinary underwriting approach. So we have a team, every team member to become a part of our team. You have to demonstrate to us that you actually understand crypto. It was not very good that last November we asked everyone to invest in crypto to show us, right? So our actuary, who was very smart, invested in $1, and she said, "Look, now I see how it works, right?" Now looking back, I understand why actuaries are actuaries. But I just wanted to say that when you come to our team, feel free to stop by our booth again. Everybody understands, and we will be more than happy to discuss, your needs. We also have a sister company, which is a cybersecurity company. Again, compared to traditional cybersecurity companies, our focus and our expertise is servicing the Web3 community. So we're specifically looking at the vulnerabilities and the entire process. Now, before my time actually runs any further, I just want to say that what we are looking at, we're looking at, obviously, your control environment. We're looking at your design. We also look at the hardware, software, and the financial strengths. And finally, we carefully examine your obligations with your customers. We are in there to give you advice to say, are you over-promising? Maybe this is out of their step. And that advice is all free, because by the end of the day, we are with you. We are your advocates, and we are the person, and we are the people that when anything goes wrong, we are going to make the claim and make you survive. Our risk appetite, obviously, I said, we like cold wallets. We have a very large appetite for the cold wallets, but we are writing the hot wallets on a case-by-case basis. We like the reputable, regulated companies. Obviously, when you come to us, please make sure you don't have financial crime history. And also, for PI, DNO, we very particularly important that you have the financial strength to make sure that your directors and officers are not trying too hard. So finally, actually, I wanted to say, come to our booth, but if not, take a picture of our QR code. We'll be more than happy to talk to any of you. And we're here to answer your questions as well. Thank you.